Entire screen. Dang. All right, there we go. Good morning, good morning, good morning. As Luna would say. Bro, I want you guys to know that I add the rewards to these events so that you guys can enjoy the events and potentially win something. You're double winning, right? Because a lot of the times I'm providing you value of knowledge and information, right? And on top of that, you guys are getting the chance to win some cash real quick or whatever, right? This is not something that's required, right? This is something that I do because I want to give you guys the opportunity to earn outside of going out there and using this knowledge. Um, if I get pestered about these rewards, I'll start removing rewards because realistically, we don't need the Givey Goblin culture here. A lot of what I'm focusing on is trying to provide you guys with value. I know you guys don't want to lose the rewards. I don't want to take them away, but like, guys, chill. The rewards today are 10 USDT for 3 people. All right, it's randomly selected, um, usually through a duck race. Today is going to be covering candlestick charts. Okay. Um, yeah. So we're going to be doing the basics of candlesticks. We're going to be doing different candlestick patterns: bearish, bullish, and risky. So yeah, we're going to be covering some of the basics today because I think that a lot of what we dove into with Caesar tended to be a little more advanced, and I'm not 100% sure if a lot of people understand like the real like solid core basics of trading in some cases. What, this one? This one's from Reaper's Revenge. It's actually one of the most popular haunted hayride attractions in the Northeast United States. It depends. We're gonna get through the content and then we'll be done. It usually only takes about an hour and a half tops. Happy New Year's, future girl. It's not even New Year's yet. That year, New Year's there yet. What are you talking about? All right, so yes, the 31st. There, it's not New Year's yet. Even the furthest point in the future, we're not on the first yet. Emmy, that is the reward, right? Learning about candlestick patterns in advance. You're great. So let's see here. Oh, wait. This was not what I wanted. Hold on. Let's see. Okay, that's fine. I have my other cheat pulled up in the background, so we can. Oh, why not, Luna? You busy? Yeah, it's only the 30th here too. Yo, Mayo, what's up? Jerry, Anita, what's up, everybody? Where's JK at? JK was supposed to be here. JK. All right, so we're gonna be talking about candlestick patterns. I did have a cool video that we can go over while we discuss these. This is from Rainer Tio. He actually has a pretty decent following for subscribers. He does a lot of like beginner content for traders. This is another person who seems to be pretty popular in the space. Yeah. So, and apparently he's trending on ChatGPT too, because I was trying to figure out some cool people to check out, and he was one of them that popped up. So, hey, I figured that this would work for us. This is an hour and 40-minute video. We're not going to be spending an hour and 40 minutes on this. I will give you that right now. But the basics, we will go over the simple basics of candlesticks, right? How many of you actually know what a candlestick is? Like what is a candlestick meant for? Yes, girlie, it is that. But in terms of trading, hola, Lucas. So what's a candlestick, guys? For those of you here, I know there's a few of you that can answer this really easily, like Nadia, Crib, Emmy, Arsh. But like, okay, that's a good point. Shows buyers and sellers. But and that's almost perfectly correct, right? but it's not 100% accurate. So Makanaki, you mentioned it. Hold on, Bailey's gonna chime in here, and then we'll dive into it. And while people are typing, just so you guys know, we host this every week. It's Degen's Den. I'm not a professional trader. I'm not providing financial advice. I will learn with you guys. I will review some things. I do have some knowledge on trading, but I'm not comfortable enough in trading to be like, yo, this is what you got to do. For that, you need alpha callers. I can't do that for you. Okay. But what I can do is I can go over basics. I can go over some more advanced trading knowledge, indicators, um, good like starting to branch off into the more technical side of it, sentiment, how to like really look at how sentiment's moving in the news and in the market for a specific token or something. We can do all of this, okay? But we do this here at CJF, Citizens Journalism Friend. It's a community based on Citizens Journalism Network. It's a community based on IBC Group and the marketing arm. And you're more than welcome to come be a friend. www.discord.gg/c friend. Pretty simple, pretty straightforward. Come be a friend. I pay more attention to my Discord than I do to the stream. I only stream it partially for the recording and partially so that, I can give friends who might not have the opportunity to burn a bunch of bandwidth on Discord the the chance to watch on another. It's a little bit harder though because the giveaways that we do, we only do the giveaways based on Discord attendance. So it's important for you to be here. Especially if you want to potentially win one of the prizes. We do $30 USDT giveaway split between every time we host an event. And we also have other things for you to do. We have Creators Corner, which is creator focused. We have Zeely Quests if you're a quester, and we're going to be implementing an XP bot, so that we can get more fun going on and more to show their participation within the server and fill up and learn and potentially. Yeah, there's going to be a lot of things. Come join it. But besides that, looks like we have some responses. Let's get through the response. All right. In stock, crypto forex trading, candlestick is type price chart. You show how the price of an asset moved over time. Correct. For telling detailed closing, opening, market. Correct. Candlestick shows how a price moved during. Yes, and that's pretty much what it basically breaks down to, Joel. It's how a price moved within a specific time period. So there's an opening, there's a close, there's a high point, and there's a low point, right? The higher the high point shows that there was more resistance, so it waked up, but it came back down. The lower the low point shows that there was real big sell interest, but then it ended up supporting and coming back up. So these are parts of the candlestick and candlestick patterns that we look for, so that when you do trade, you're trading a little more informative. It's never something that you want to use on its own, right? It's definitely something that you want to couple with other indicators like actual indicators, support and resistance, volume, trend. Trend is a big one. And when you're looking at candlestick patterns, don't try to look at candlestick patterns and do it with like the 5-minute chart or whatever, because that doesn't help you. The longer the time frame, the better off you are when it comes to candlestick patterns, because it's a proven movement. It's a proven way that the market's going, a little more than a 5 or a 15-minute chart would be. So you're better off looking at the 1 hour, the 4 hour, the 1 day. The higher up you go, the better the pattern shows, the more likely it is to move in that direction. The only problem is that it also is typically the longer you're going to wait. So like if you're trying to day trade or scalp trade for that specific time period of 5 or 15 minutes, looking at candlestick patterns may help you when you look at trend in candlestick patterns, but you're not going to expect it. It's going to fluctuate, especially in crypto. It's going to fluctuate heavily within those periods, and you're not always going to get your scalp. You're not always going to get your trade in because you're looking at a smaller time period and trying to right. So it's something that you really have to consider when you're looking at trades. If you're looking at shorter trades, news definitely helps better, I think, because you're trading based on what's happening currently out there on the news market, on the market itself, based on trader sentiment from a Trump announcement, for instance, or from somebody tweeting BTC or Doge, like Elon Musk used to do all the friggin' time, right? So now we're just gonna dive into this for now, though. We go into all those other things. We have a history of videos here from Caesar when Caesar was running to the moon events for us. So if you come in and you get the rolls, you'll be able to check those out as well. I still have those posted. So yeah, but for now, I'm gonna start this up. We can watch this.
Techniques, the principles, right, can be applied to these markets. Hey, what's up, my friends? So welcome to the ultimate candlestick patterns trading course, right? So who is this course for? This course is for you if you're a forex trader, you're a stock trader, or even a cryptocurrency trader, because the examples, the strategies, the techniques, the principles, right, can be applied to these markets. And also, it doesn't matter whether you're a day trader, a 4-hour time frame trader, a daily time frame trader, because again, all this can be applied to the different time frames
You and
as well.
those GIFs, bro.
So this is a very comprehensive trading course. I will put the timestamps somewhere on the screen so you can see which are the different sections and which are the timestamps.
Looks like we can watch this up to like the 31-minute mark.
And then hop around the trading course, right, if you wish to. But my suggestion is that if you're new to trading, I recommend you watch it from start to finish because the concepts, right, are built upon, right, one section on top of the other. And by the end of this course, my outcome that I hope for you is, number one, to be able to better time your entries and exits using candlestick patterns. Number two, to help you identify when the trend is about to reverse so you don't get caught on the wrong side of the move, and also be able to predict market turning points. And finally,
whenever you're betting on these, like these reversals and stuff, it's not always easy to tell. Make sure you're setting your stop losses appropriately because it's risky as fuck. In trying to predict the reversal, you're not waiting for confirmations or anything like that. That's dangerous. Just a heads up. I've tried that a few times, gotten wrecked plenty of times doing it. It's not fun.
to equip you with a trading strategy so you can be able to profit in bull and bear markets. Sounds good? Then smash the thumbs up button.
The market will whoop you, Makanaki.
When it comes to candlestick patterns, right, you will likely see one of two colors. Number one is what we call a green candle, a bullish candle. And the thing about candlestick patterns is that every single candlestick pattern has 4 data points: the opening price, the closing price, the high of the day.
I should have just started the video.
Low of the day. So let's say, for example, you see this candlestick on a
daily. I already went through all this, and now he's repeating it again. I did not pre-watch this, guys. Okay,
is the opening
just
price of the day. This is the price where the market opened at. And this over here is the closing price of the day. This tells you that, let's say the market closes at 5 p.m. At 5 p.m, this over here at this point is the closing price of the day. Now, what about this? This is the high. This is the high of the day, meaning during the day, right? What is the highest price point that the market went? So it's actually signified by this line over here. We call it the high of the day. Some people call it the upper wick, the upper shadow. That's fine as well. And then over here, clearly this will be the low of the day, the lowest price point that the market went during the day. So on the other hand, if you see a red candle, again, it has 4 data points, but where it is different is that the opening price now is at the above top, the closing price, whereas you look earlier, for a green candle, a bullish candle, the opening price is below the closing price. Okay, so again, here, same thing. This is the high of the day. If you are looking this on the daily time frame, this is the opening price of the day for a bearish candle. This is the closing price for the day for a bearish candle, and then this is the low of the day. Now, what if you don't see this on the daily time frame? What if you look at this chart or candlestick pattern on the 1-hour time frame? How do you interpret this? Again, same thing. If you see this on the 1-hour time frame, so let's say, for example, let's refer to the bear candle. Let's say the market opened here at 12 p.m. Okay, then this means, right, at this closing price, if you look at this on a 1-hour candle, this candle will be formed, right, at 1 p.m.
Yeah.
This means that at 1 p.m. this candle will.
So candles are going to change based on the time frame that you're right. So you look at it at 12. It's 12 to 1. That'll be the 1 hour chart. 12 to 4. That'd be the 4 hour chart. Look at it for the 15 minutes. 12 to 12:15. And it shifts and it changes the pattern you're going to see. So make sure that when you're looking at it, look at the longer charts, because you may see patterns that don't necessarily help you and
kind of
lead
like
you the wrong way.
Be formed and printed on your chart. Okay, and then the next candle will sort of, let's say, open somewhere here, and then next candle will start to move up and down. And when the hour is up, then the candle will kind of like be finalized, right? So if you are looking this on the hourly time frame or the 15 minutes time frame, this is what it means, right? So again, just a quick recap. If you look at this, let's say one last time on the, let's say the 15 minutes time frame, let's say the market open here at 12:15 p.m. Okay, what this means is that at the closing price,
we can speed this up a little bit.
The candle
right,
will
guys?
Close. It will be fixed and printed on the chart, and then the next candle will be open, right, and start moving up and down.
Let's see what he sounds like at 2.0.
First, the candlestick pattern has 4 data points: the open, high, low, and close. A bull candle, this is where the close is above the opening price, and for a bear candle, this is where the close is below the opening price. Now that you've learned the basics of a candlestick pattern, in the next section, I want to teach you 9 powerful candlestick patterns that every trader must know.
Here we go.
The first candlestick pattern that you
hammer.
are going to learn right now is what we call a hammer. Okay, so what is the meaning of a hammer? So just a quick one, right? This is the opening price of a hammer. So if you look at this again on the daily time frame, this is the opening price of the day. This over here is the lowest price point that the market has went during the day. This is the highest price point the market has actually reached, right, during the day. And finally, the market closed at this price
actually
point.
Looks really good.
So what does a hammer mean? What does it signify? So let me explain. So
looks like he's got a bunch of
egg yolk. Time frame, this tells you that when the market opened, the sellers quickly took control and pushed the price lower down this extreme lows of the day. So during this point of maximum pessimism, right, the sellers, they were in control, driving the price down really low, and then the buyers, they were pushed to a corner, right, ragged at their backs, right? Suddenly they found the strength. Maybe they took some steroids, they gain control of their strength, their muscles, and they push the price up higher, okay, and eventually closing near the highs of the day. So you can see that during the early part of the day, the sellers were in control, driving the price down lower, but eventually, right, the buyers stepped in and pushed the price up higher, finally closing near the highs of the day. So this tells you that the buyers, they are temporarily in control, right? So this is what this candlestick pattern means. So it's a bullish reversal pattern. So for those of you who watch Avengers Endgame, right, you know that towards the end, Captain America is left alone, right, facing Thanos' army, okay? And at the point in time, it's the point of maximum pessimism. You think that, oh man, that guy is, he's dead, right? How is he going to find the army? And then what happens? His friend, I think Sam, the Birdman came in. The portal opened, Black Panther showed up, Wakanda forever, right? And then when the war ensues and the good guy win, right? So you can see the story is similar. The point of maximum pessimism, right? And then the reversal where the good guys overcome Thanos' army. So this candlestick pattern kind of like just reminds me of that story. So if you look at the chart, right, it will typically look something like this. This over here, again, is the hammer. You can see that over here, this reversal. The price opened at this price point. Then it went down to the extreme lows over here. Buyers took control, okay, and then finally closing near the highs of the day. And the market did, had a slight brief rally up over here. And of course, we don't just trade hammer candlestick pattern in isolation.
He's saying it right now too. You don't just trade the hammer candlestick pattern. You got to look for the areas of support. You got to look for confirmation. If you see a good support there, if you see that it's a hammer candle, you see that you've got a confirmation pushing it higher up, right? You can then trade on that and hope to look towards that resistance mark, right? Oh yeah, it's tough for swing traders and women traders, but that's a lot of what the market is, Emmy. Like a lot of people are just trying to make quick scalps. They're not looking to sit in a trade for 2 weeks or a month, right? A lot of people are trying to get in and get out intraday. Like, girly, restart your stuff. All right. But yeah, that's exactly what I was saying there to Emmy. Yeah, restart your stuff. Yes.
Isolation. We take into account other factors like support, market structure, etc. I'll cover all those stuff later on, but for now, I just want you to get familiarized, right, with this particular candlestick pattern. Now, on the other hand, right, shooting star. This is kind of like the inverse of a
shooting star is like the reverse hammer.
So I'll just go a little bit quickly. For shooting star, this is the opening price.
This going very negative. This is the lowest, and you'll see a lot of these at like resistance points
of the day. So this one you can see that
where like the sellers end up pushing the price back down
during the early part of the day, right, when the market opened. The buyers took control and pushed the price up higher, near the highs of the day. And then the sellers, right, say, that's as far as you're going to go, my friend. And then they push the price down lower, driving it down near these lows of the day. So I do apologize for my wavy lines. I didn't really want that to happen, but it somehow just goes zoop like that, okay? So yeah, anyway, this tells you that the sellers, right, are temporarily in control because at the start of the day, the buyers tried to push the price up higher, but got overwhelmed by the strong selling pressure who then drive the price down lower, closing near the lows of the day. So this kind of reminds me, right, where you didn't study for an exam and you go for an exam and what happens is that you go back to the report card, man, you got an A despite not studying for the exam. And then it's only you kind of realize, oh, it's actually A for absent. And then your whole world comes crashing down again, right? So yeah, same over here for this shooting star pattern. So if you look at the chart, typically it looks something like this on the chart. You can see over here.
As you can see, it's around a resistance point, right? This was a prior resistance point, came up, right? Bounced off again, came up, shooting star, and then it pushes back down. So what you'll see these pop up mostly around resistance.
Here, the price opened at this price point. Initially, the buyers were in control, pushing the price near the highs of the day, and then the sellers took control and pushed the price down lower, closing near the lows of the day.
Is that better, Joey?
Next, we have what we call the bullish engulfing pattern. And by the way, if I have not talked about this thing over here, this is what we actually call a body. So from this over here to this, right, basically the colored portion of the candle, this is what we call the body. Okay, so from here to here, we call this the body. And then we have things like, shadow, tails. Let's keep things consistent, right? Let's call this the shadow, right? So basically from here to here is what we call the upper shadow, right? Ninja turtles, right? Shredder in the shadows, or turtles in the shadows.
This guy is such a weeb. This guy's got to be like a comic book anime weeb. Like he's in the shadows, in the shadows. He's fucking funny as hell. But at least he's entertaining while he's trying to teach, right?
Over here, right, is what we call the lower shadow, right? So we have body and a shadow. Body is the one that is colored, right? Shadow is the kind of like just the candlestick, that shadow, that line sticking up. So now, what about the bullish engulfing pattern? What does this candlestick pattern mean? So earlier you've learned the hammer and the shooting star pattern. Those are individual.
So what do you guys think the bullish engulfing pattern is? Just off the top. Some of you may know, but like for those of you who don't know, what do you think it is? What do you think it means? What do you think it's an indicator of? And I asked the class. Okay. Well, why the sad face? Don't be shy, Winston. You're welcome to hop in and chat on it too. Come on. I'll wait for you to post, Winston, and then I will start the video back up. And we can see how close you guys came. Sellers are overshadowing buyers. Yep. Okay. All good answers.
Reversal candlestick pattern. One candle formation. But for this one over here, you see there's two candle formation. You have this one is the first candle, this is the second candle. So for the first candle, you can see the opening price is here, and the sellers took control and drive the price down lower, closing near the lows of the day. That's what happened on the first day. Second day, what happened is that the market opened at this price point and the buyers push the price up higher, closing near the highs of the day. So there's this sudden turn of events, right, where the sellers on the first day they thought they have won the battle, but only to see that next day the buyers step in and push the price up higher, closing near the highs of the day. So this is what we call a bullish engulfing pattern. Why is this? What does the word engulf mean? So engulf means basically to cover, to wrap around. So you can see that the engulfing pattern, the body of this second candle has engulfed the body of this first candle. So this is the body of the first candle from here to here, okay? And then the body of the second candle from here all the way up to here has engulfed the body of the first candle. So this is what we call a bullish engulfing pattern, wrap around, bullish engulfing pattern.
It's
and
kind
another
of
thing
in
to
the
add
name.
is that
It's a bullish pattern.
So by right, right?
So the buyers
if you read most
are
textbooks and
overshadowing
courses, right? By right, the definition of a bullish engulfing pattern is that the opening price of the second candle, right, it has to have a gap, right, from the low of the first candle. So by right, let me just show you what I mean. So most textbooks, what you'll see is that this is the low of the first candle, right? So by right, the opening price next day has to be somewhere about here, okay? And then the market eventually, push up higher, and then let's say close near the highs of the day over here. So you can see that the opening price is actually here, and this is the lows of the first day. So you can see from here to the opening price, there's what we call a gap, G-A-P, a gap. Okay,
Yep.
so this is the almost proper, but the textbook definition of a bullish engulfing pattern. But you can see that the example that I give you, there is no gap. I simply just left the open right at the same price as the previous day closing price. Why did I do that? And the reason is simple. It's because if you trade the forex market, you trade the crypto markets, it's traded almost 24 hours a day. You won't see gaps on your chart, rarely, right? So this is why I removed the gap portion, right, to kind of like make this more relatable for people who trade the crypto markets or the forex markets, right? But if you trade the stock markets, don't be surprised, right, where you see a bullish engulfing pattern. The opening price isn't here, but it could actually be slightly below the previous day low over here. Can actually open over here, right, and then finally push up higher and then closing near the.
So basically, what he's saying is that you won't see gaps. There will be gaps in the stock market because trading ends at a certain point, and when it opens back up, it may start lower based on like after hours trade orders put in preparation for the next day. You'll see where sometimes the opening will open at a different point from the last close, and it could be higher or it can be lower. But usually it would be a lower opening and then it would push back to close higher, for the bullish engulfing. But with crypto and forex, since they're 24-hour markets, you don't really see those gaps. So that's why he adjusted it to be at the same level there, because you're not like, and especially for us being in crypto, you won't see those gaps.
The highs of the day. So this is actually pretty common in the stock markets, but for the forex and the crypto, not quite as much. So just something to share with you. And if you look at the chart, the bullish engulfing pattern, right, looks something like this. First candle is a down day, market closed near the lows of the day, and the second day, the candle, right, close higher for the day, closing near the highs of the day, and it's actually engulfed, right, the body of the first candle. Look at this first candle, and then this is the second candle, right? It's engulfed the body of the first candle. So this is what we call a bullish engulfing pattern. It means that the buyers, they are temporarily in control, and in this case, it did, went up a little bit higher. So the inverse is true, right? So this is what we call a bearish engulfing pattern. So the first candle.
This is just the reverse of what we looked at with the bullish engulfing. And no, Slime, you don't ever rely strictly on candlestick patterns alone. Candlestick patterns are good indicators, but they're never something that you should rely on solely by themselves. That's just like support and resistance. Like you can see it bounce off of resistance, but like if the volume isn't there to keep it pushing back down, let's say, then it may potentially go back up, right? If it bounces off of support, then there's no volume. It may continue to go back down because there's just not enough money flowing into the market to push it back up towards the resistance. If you're looking at shorter candlesticks, 1 minute, 30 seconds, 5 minutes, 10 minutes, 15 minutes, whatever, you're not gonna have as reliable data off of candlestick patterns just because they're meant for longer term data, to really get a good pattern down. There are other indicators. There's EMA. There's and we can go into those next week, where we'll go into some of the more technical indicators that you can use. EMA, Fibonacci, a lot of people are big on. You've got the stochastic indicators, the Bollinger Bands. There's a lot of different things that people use and rely on in their day-to-day trades, that some people do use, some people don't use. Ultimately, knowing historical trend, knowing historical support and resistance, watching the volume and which way the trend is going can help you determine whether or not you are going to want to get in on that trade. A lot of it is just looking at patterns in history, and then some of it is like, who the fuck knows what's gonna happen realistically. Like it's a chance that it could bounce off of the support and then fake back down. Like it can go right back down. Like you can see it break through a support and then come back up. It happens. Yes, you'll see a lot of these, like the hammer, the shooting star. You'll see those at key support and resistance. The bearish engulfing, the bearish engulfing, bullish engulfing, you'll see more at support and resistance. So that's something that you have to think of. a lot of these are based strictly off support and resistance. They're not just like something that you see in the middle. Some of them are like cup and handle can happen in the middle, in between. But you're not gonna you're some people trade specifically off of that, whereas others trade based on other indicators as well, and they look for these patterns to help them confirm their trades or their thoughts on which way the market is.
So it's green, okay, and then you can see that the buyers, they are in control, closing near the highs of the day. And then the next candle, at its opening price, the seller drive the price down lower, closing near the lows of the day. This is what we call a bearish engulfing pattern, and it looks something like this on the chart. Okay, so you can see the price over here, buyers to control and drive into this area of resistance. And then what happened next is that we have a bearish engulfing pattern over here, where this body of this candle has engulfed the body of the first candle, closing near the lows of the day. And then what we have is like a decline down lower. So once again, right, we don't trade.
It's all based on history, Slime. Since you got a question on that, we did do support and resistance last week, but I can look at coin market cap real quick, right? Let's go for BTC, right? I haven't looked at the tournament. Let's see, we're here. Where the hell is the candlestick? I'm on a different browser too. So here we go, trading view, right? We're looking at what, the 1 hour. Let's go for the 4 hour. Let's move this down a little bit, right? So we see that if we look at this, there's resistance here or support here, right? There's been resistance here twice, right? And these are the most recent resistance, and it looks like there was support here prior, and now it became the resistance because it pushed back down, right? There was resistance here prior. Oh, market looks like shit, bro. Oh. But yeah, so like here you can see that this has a couple of supports recently, but if you look closer, there's been some support here, right? So this would technically be your most recent support level, I would say, right about here. So you can take from here, go across, right? Can't do a straight line to save my fucking life. There we go, right? So on the short term level, like this is a support line, right? And then on the long term level, you see that this is a resistance line because it touches about twice, right? And it pulls back. So we're looking between what, 90 and 87 right now. It's a really tight like support and resistance here, but like, oh, that's cockeyed as fuck. There we go. That was that. There we go. Right? But then if you look back historically, like we've got looks like about here, right? Like at the 80, 84, 85 mark, right? And then we've got up here, which is probably about here, I'd say. Where it really resisted. Stop resisting. All right. So I'm watching too many of those drama shows lately. Let's see. So like you can go off of this, right? If it pushes fast, right, and it continues down, you're gonna expect resistance down here. If it pushes past and continues up, you're gonna expect resistance up here or support down here. You're gonna expect resistance up here, right? Yeah, the BTC looks like shit right now, guys. Damn. Like looking at this history, damn, bro. This last like month or two has been brutal. For fuck's sake. Jeez, it's like complete dump, bro. Complete dump. But at least it bottomed out here by 80, right? Came back up, bounced, came back up, bounced, right? And now it's bouncing up here. So it looks like it might be starting to trend back upwards, which looks good. We'll have to see. And realistically, in the past, there's been resistance. Like if you look at it the longer term, right? There's been resistance at this 80 mark in the past, right? Like it bounced here, it bounced here, it bounced here. These are all points that you can look at and say, oh shit, you know, like this was a prior support. So like support and resistance is important, Slime. But you look at the historic, right? You look at the chart, you look at where it was bouncing and when, how much volume. You can come in here and you can check the shit. Come in here, I wiped it. Come in here and you can check let's see, measure, zoom. Honestly, I should be looking at this on TradingView, not on fucking CoinMarketCap. But you would be able to select volume. It looks like community sentiment's bullish right now, which is good. CoinMarketCap has a lot more information than just the trading data, so that can be helpful. Well, that's up to you, buddy. Realistically, like you see that there was a push down here, came back, it confirmed. Like for me, I would potentially trade off of this one, right? Like it looks good here, and then it pushes up, right? But you see that it pulled back off of close to the bottom. Realistically, even on this, I'd be a little nervous. But if you look at something like this, right? Hard red line, it bounced at the point approximately where it was before, right? Turned green, pushed up. I'd be comfortable getting in somewhere over here, right? And then at this pattern here, when it hits here, right? There was heavy sell, right? You could scalp somewhere in between there. You know what I'm saying? If you got in over here, you saw this candle, this candle confirms. Even if you got in here at the bottom of this candle and you came up here, depending on how much you're trading, that's like a 2 or 3K fucking move. Like you could realistically set it there and be okay with that, right? But it's still really volatile. It's rough here, right? And it hasn't touched down again yet for the support level. So I'd be careful, you know. It's it's in a really it's in a really tough spot here, right? The historical trend over the last 2 months has been bearish. You don't really have any like really, the range here sucks, right? I right now, honestly, I'm not fucking with that. Especially where it is right now. It bounced over here twice. So that's what, 90? I don't know, dude. This was Emmy. Where would, like, if you were looking at this chart, what would you be looking for these candles here? What would you be looking for to get in on a bull or a bear trade? Since I know you trade a lot, bro. You and Crib, where would you want to get in? What would you be looking for out of this section? This is, mind you, this is the 4-hour chart. What would give you confidence in making a trade anytime soon? Just for the sake of Slime right now, we're gonna ask them. That's good. It's risky, dude. It's risky, especially right now, right here. Eesh. the hell is going on outside? Yep. You have to learn when to trade and when not to trade. I wouldn't get in here. I honestly, you can assume, right, that it's gonna go back down to where it bounced before, right? Based on like the way it's been moving previously. But at the same time, that's not a good indicator. That's a guess. That's a gamble. You want to trade in patterns that you can recognize and that you expect to actually go the way that you want it to go, right? Like, you guessing at this point, forcing trades is not a good way to operate, dude. I'll tell you that.
Bearish engulfing pattern in isolation, we have to take into account the context of the market. So don't really later on explain to you the strategy, the entries, the exits, examples, and much more. And by the way, if you're enjoying this training so far, smash the thumbs up button. If not, hit subscribe. So moving on, the next candlestick pattern is what we call a doji. Okay, so this again is the high of the day.
Doji.
This is the low of the day. And then this is over here is the opening price of the day. So now, quiz time. As I've said earlier, right, every candlestick pattern has 4 data points: the open, high, low, and close. But in this case, I've only shown you the open, high, and low. Where is the close? Take 5 seconds to think about this. 1, 2, 3, 4, 5. Okay, the answer is this. This over here is the close of the day. So a doji simply means that the opening price and the closing price, they are the same price point. So yeah, we still have 4 data points, just that the opening and the closing price is at the same price. So let's say they close at
Alright,
opening price at $2.
Thanks for hanging out, dude.
Also at $2.
This is going to be recorded.
On this,
so if you want to come and look back over it.
So what does a doji
ultimately
mean? So
your best
simple,
bet
this is the opening price.
would
Tells
be
you
to
that,
check out
early
one
part
of the
day,
trading,
buyers to control, push the price up higher near the highs
one
of
of
the day,
the
and then the seller suddenly reverse the market down lower, taking control to these lows of the day. So this is the lows, this is the highs, and then eventually the buyers found the strength once again to push the price up higher, and finally they close pretty much where they open for the day. So you can look at this. It's like
trading journey,
indecision, right? Both the buyers and sellers, nobody is in control. So it's like, you know, the girl's like, man, which guy should I go with? This guy is rich, this one is handsome, this one really loves me. I'm undecided. Who do I go with? You know. So yeah, there's a doji, undecided, right? So a doji is a neutral pattern. Both buyers and sellers, nobody, you know, has won the battle yet. So if you look at the chart, you can see that doji, this is a pretty neutral pattern. This is what we call a doji candlestick pattern. Now moving on, right, there are many variations of a doji. So here are a few to share with you. This is what we call a dragonfly doji. Okay, so let's find out where are the 4 data points. This over here is the opening price, and this is the low of the day. So now let me ask you, where is the closing price and the high of the day? As you know, every candlestick has 4 data points. So where's the high of the day and where is the closing price of the day? Let me give you 5 seconds. 1, 2, 3, 4, 5. Okay, answer is this. This is also the high of the day as well as the close of the day. So if you look at this dragonfly doji, the opening price, the closing price, and the high of the day is all at the same price level. Okay, so this is what we call a dragonfly doji. So why is this called a dragonfly doji? I have no idea. I can only speculate because people think that this looks like a dragonfly. Okay, maybe not, who cares? So anyway, so what is the meaning behind a dragonfly doji? So take another 5 seconds and think, right? What is the meaning behind this dragonfly doji? Does this look similar to a candlestick pattern that you have learned earlier? 5 seconds. 1, 2, 3, 4, 5. Okay, so if you say that it looks similar to a hammer candlestick pattern that you've seen earlier, then you're absolutely right. So a dragonfly doji has a similar meaning to a hammer. It's a bullish reversal pattern, although not quite as strong as a hammer, but I would say it still has a bullish meaning behind it. This is where the opening price over here, during the early part of the day, the sellers took control and pushed the price down lower near these lows of the day. And then the sellers, you know, they were back to a corner. I mean, the sellers were in control and the buyers got pushed to a corner until they say, that's enough, run. Let me come in, right? Come in, yeah. For those of you who've watched Dragon Ball, right? So yeah, this is where the buyers pushed the market up higher, closing near the highs of the day, right? So they closed the highs of the day, which is also the opening price of the day, right? So this tells you that they a reversal in market sentiment. Sellers were initially in control over here, and then the buyers reverse up higher, close back towards the high, towards the opening price of the day. So this is what
a dragonfly doji, which would that be? Would that be bullish or bearish to you guys? Go ahead, Emmy. Ask away. There you go, Winston. You got that one. You got that one. What's your question, Emmy?
You mean by a dragonfly doji? It's a bullish signal. So if you look at the chart, right, this is how a dragonfly doji looks like. Okay, so dragonfly doji opening price is here. Sellers in control, pushing down towards the low of the day over here before the buyers finally step in and reverse back up, closing back where the market has opened earlier. So this is what we mean by a dragonfly doji. Okay, the inverse of the dragonfly doji is what we call the gravestone doji. So quick one, right? What candlestick pattern do you think the gravestone doji looks like? So if you learn earlier and you say a shooting star pattern, then you are absolutely right. It looks similar to a shooting star pattern. The difference is that
So since this one looks like a shooting star pattern, this one would be what, guys? Yep, 1 hour time, Slime. Yes, sir, Crib. Bearish. Good job.
For a gravestone doji, there is no body, whereas a shooting star pattern, you have this body over here. So a gravestone doji, similar to a shooting star, it has a bearish signal to it, where initially during the open of the day, the buyers were in control, push the price up higher, and then suddenly the sellers took control and drive the price down lower, closing near the lows of the day, which is also the opening price of the day, which is also the closing price of the day. So this is what we mean by a gravestone doji, signaling to you that the sellers, they are temporarily in control.
Bearish,
so it looks something like this.
Just
over
like
here,
the
you can
market.
spot the gravestone doji. Over here is the opening price, this is the low of the day, as well as the closing price of the day, and this is the high of the day. So initially, buyers took control, push the price up higher, closing near the highs.
Notice this though. Even though there was a gravestone doji here and it looked bearish, right? It pushed down, right? But then it bounced again and it pushed up over. So like it's all ranges, guys.
Of the day, and then the sellers drive the market down lower, closing back towards the opening price of the day, and signaling to you, right, there is a rejection, right, of this higher prices over here. Okay, the next candlestick pattern that we have is what we call the morning star pattern. And I want to point out is that this particular candlestick pattern has 3 candles involved. This is the first candle, this is the second candle, and then this is the third candle. So this is a 3 candle reversal candlestick pattern, right? There are 3 candles involved. So what does the morning star pattern mean? So let's analyze this, right, bar by bar. So on the first bar, the first candle over here, you can see the market open over here, and the sellers took control and pushed the price down lower, closing near the lows of the day. So at this point, you can see that the sellers, man, they are winning the battle, right? Booyah, who's your daddy? So the sellers are clearly in control, driving down the market lower for the day. Then what happened next is that the next day, the market opened at this price point. So at this point, right, I think the sellers will think that, oh man, this today is going to be another bloodshed day, right? We're going to crush the market today as well. But what happened instead is that the market tried to rally up higher, right, over here. Then this is the highs of the day, and then only to reverse down lower.
Hey Chris,
testing the lows of this day, or rather testing the lows of the day, and then finally pushing up higher and closing right where it pretty much opened for the day, which is over here. So at this point, you can see that the sellers, they try to drive the price down further, but it's met by but there's a lack of selling pressure, right? Or there could possibly be strong buying pressure stepping in, where the opening price and the closing price is the same for the day. So this candlestick pattern, the second day one, if you have seen the earlier training, you know that this is what we call a doji patterns. And
that's actually a really good question. I mean, how do you trade with candlestick pattern, fully knowing that any spotted candle in your chart could be a different candle in a different time frame? This is why you go by the longer format. Like you go by the 1 4 hour, the day chart. If you go by the longer time frames, the better off you'll be. You guys, if you're trading on shorter time frames, it's difficult because you can't really, like, now you're seeing things that may not actually be there, right? If you're seeing things that could be, like, if you're seeing a shooting star on the 5-minute chart, that shooting star is not a shooting star on the 10-15 minute chart. That shooting star is not a shooting star on the hour chart. It's part of a larger candle, right? It's part of a longer term trend. It's hard to base anything off of the short term candles. Realistically, I would be really cautious with using anything that isn't the like the 4 hour or the 1 chart, because it's really hard to determine what you're doing, right? Or what the trend or pattern are. If you're trying to do shorter term trades, I wouldn't necessarily, like, on a 15-minute chart, I wouldn't, unless you're getting out in like the next 3 or 4 hours, right? I wouldn't rely too much on those. And in crypto, it's even harder because you're not getting, you don't have the same volatility as other markets. So you can't really go by that because it can be the perfect candlestick pattern, right? And then it can go the opposite way. Exactly. Candlestick patterns are not enough. You definitely need, yeah, key levels for one helps. But you need more than just candlestick patterns to trade off. You need more than candlestick patterns and support or resistance, depending on what time frames you're trading. So it never relies specifically off of the candlestick. There you go, Slime. That's completely correct. No, nothing from the event today went. it's just a code final tap.
Neutral pattern where both the buyers and sellers, right, they are pretty much in equilibrium. Okay, so nobody's winning the war as of yet. And what happened on the third day is, very interestingly, on the third day, the market opened at this price point. They opened over here. Okay, and then the buyers suddenly found the strength and stepped in and pushed the price up higher.
Code's in the announcement,
right, and they closed near the highs of the day. So if you look at this from this three candle perspective, the story goes something like this, right? On the first day, the sellers are in control. They drive the price down lower on the first day. The second day over here, the sellers tried to drive the price down lower but couldn't push it any lower. Instead, what it ended up is a doji. It's a neutral day where both the buyers and sellers are in control. And on the third day, the buyers suddenly stepped in and pushed the price up higher, closing near the highs of the day, reversing, right, the down move, right, from 2 days ago. So this is a bullish reversal candlestick pattern, right, the morning star, telling you that the buyers, right, they are temporarily in control. So if you look at the chart,
guys who said it was
something
bullish,
like this. So you can see over here, right, for this particular example, the price came towards this area of support, right? So price came into this area of support. We had a bounce up higher.
If you look at every one of these candlestick patterns that he's mentioned, every one of them have been at key support or resistance levels. So like right here, you're at the support. It bounced off, it came up, came back down. The morning star is here within the area of support, and it's a bullish indicator. So from here, you're looking for a bullish pump, right? Now it could go the other way. But if you see this candlestick forming this way, right, and you let's say you got in on the trade here, and then you see that it dumps back, you set your stop loss down here because you know it's still a support level. The code is in the announcement that I made in the channel that I provided. You'll see it. You just gotta look. You just gotta look. It's in the last post I made.
And retest support. So over here, look at the second retest. This is where I want you to focus on. We had strong selling pressure, right, from this highs all the way down into this area of support over here. And then we have this particular morning star pattern, which is shown over here. So let me explain to you the psychology of the market. So the market drive the price down lower. On this particular candle, you can see that the sellers, they're clearly in control. They might have thought that they won,
better than Emmy.
You know, broke below support. The market is going to collapse, going to go down lower. Right? Who's your daddy? Right? And on the next day, we have this doji looking pattern. So when the market forms a doji looking pattern, it can be one of two scenarios. Number one, there's a lack of selling pressure, lack of, I can just call it SP, right, selling pressure. Or number two, it could be strong buying pressure. Okay, so we have no idea which is which. If there's a lack of selling pressure, then you can see that the candle, the range is just not going down any lower because nobody's wanting to sell. At the same time, it could also be strong buying pressure because there could be very strong selling pressure trying to push the price down lower. But why it ends up as a doji is because there's also an equally strong buying pressure coming in, right, to hold up the price. So strong selling pressure meets strong buying pressure, you end up as a doji as well. So it could be one of these two scenarios. We do not know which is which unless we look at volume and then we can tell. But as of now, I have no volume on this chart, so we can't tell as of now. And then what happened is that on the third candle, we have this strong bullish reversal candle. I think we can even call this as a bullish engulfing pattern if you want, because it has engulfed the body of this this candle over here. Right, see, we have strong bullish candle closing near the highs of the day. So this at this point, it tells you that the buyers, they are temporarily in control, because if you look at the story for this morning star, sellers push the price down lower.
Girlie, stop messing with them.
Couldn't push it any lower, form as a doji. The third day, buyers took control and push the price up higher, closing near the highs of the day. The move is pretty strong that even closed above, right, the highs, right, of this first candle over here. So at this point, this morning star shows you a bullish reversal pattern, and that the buyers, they are temporarily in control. Next on the list is what we call the evening star pattern. So one thing to point out is that the evening star is similar to the engulfing pattern in the sense that if you read textbooks or courses, right, they will tell you that the morning and evening star there should be a gap. But the reason why I didn't put a gap over here is again because if you trade the forex market, the crypto markets, you would rarely see gap on the charts. So if you look at textbook examples, it would probably look something like this. So the first candle will be something like this, okay? Then this second candle could be over here like this, and then the third candle, it comes down lower like this. Okay, so this is something that you might see in a textbook or other courses. So you can see over here, right, from here to here, right, is the gap. Okay, this is the gap that we have over here that you might see elsewhere, right? But for me, I didn't put the gap over here because again, you trade the forex or crypto markets. This is something that you will unlikely see on those markets. So I kind of like remove this to make it relevant for crypto and forex traders.
Like
and another thing to add also is that for the evening star and the morning star pattern, it doesn't. This one doesn't necessarily have to be a doji pattern because it can also be a pattern like what we call just a small body candle, something like this. It could be something like this, right? A relatively small body candle like this, and then it reverses down lower over here, close like this. Right, this again could be also an evening star pattern. So there are slight variations to it, and I'm not going to cover all the variations because later on, as you'll find out that
there's variations to all these. The main ones are essentially these, the ones that he's showing. It's not. You're gonna see what looks similar, and those can work in similar ways. It'll indicate or evening stars barely show up. Yeah, I mean, some of them you will never see. Cup and handle is another rare one from what I know. When people say the cup and handle, they get all but like trading view, let's see. ETC. One day. I mean, something like this could almost be a morning star, right? Something like this could almost be a morning star. It was showing bearish, right? You have the really small candle there with the leads, and then you have a bullish candle, and that engulfs that one, right? And if you look at it, it's not a perfect morning star, right? But it shows, right? You can see the bearish here with this. It's not a full shooting star, but you can it resembles a shooting star if you look, right? Almost. It's not fully at the bottom, but it went really high up. It came back down hard. But sellers won out over the buyers, and then it started to come back down, right? And then you can see what looks like a shooting star here, and boom, it pushes down hard, right? Wick back at the support, right? Comes back up. Bullish engulfing candle comes back up a bit, right? Now, these aren't necessarily perfect indicators, but they're showing a pattern of buy and sell. They're showing a pattern of movement on the market in transactions. And that's what you're looking for. You're looking for patterns. If you bought in up here, right, and you came up, you could have made a quick scalp off of that, right? Because you saw this pattern and you said, you know what? I'm good with it here. Let's start. Let's see. If it comes back below the top of the candle, I'll stop loss out. Once it starts to retrace back off the top of the candle, like it hits top and it starts to pull back hard. I see the volume moving the opposite way. Yeah, you know what? I'll back out of it and I'll make my quick money. I wouldn't trade on this long term. You know what I'm saying? But something I'm watching for maybe an hour or a couple hours or something. Because like if we then look at this, right? And then we jump down to the 1 hour mark, right? Where the fuck was it? Hold on. Day. Right. We're looking at what time? We're looking at Tuesday the 2nd, right? So let's go back to the 1 hour. And let's look at Tuesday the 2nd, right? Real quick. You see all these movements that you see in here are all within those day candles, right? Oh, we can't go that far back. All right. Let's go to the 4 hour. Right. Let's see. All right. We're gonna have to look after the 8th. let me see here. Try this again. Day, right? Oh shit. Let's look closer to where we're at now, right? Let's say this is November, this is 2nd. Let's say for something. It really isn't much right here though. This is a rough month, bro. I feel bad for anybody trading this. Yeah, I'm like I don't see anything that I could potentially dive into here. Hold on, 4 hours. Let's see if I can go back far enough now. Oh yeah, I can. So we can go back to the 2nd, right? Come on, dude. Fuck off. I have a trading view account. Leave me alone. All right. Let's look for the 2nd, right? And the 2nd was here. So this is also kind of a Morningstar pattern, right? Like realistically, it came down, it hit resistance, came back up, kind of stalled, and then there's a it starts up and it engulfs this one by a little bit, right? It's not much, but it's a little bit of a Morningstar pattern. It shows up. It's a risky play getting in. Like it's not fully at like the resistance marks from historicals, right? Like there's no history of support right here, right? For you to know that it's gonna bounce off of. So like it's risky. It's a risky trade. But you like as you start to get in more, that pattern tends to break up a little more, right? If I went to the 1 hour chart, right? I don't even know if I'm gonna be able to see the 1 hour chart. Yes, I can. Let's go. All right, let's see. This is the same. This is the same time, right? Again, it's now the Morningstar pattern is completely broken, right? If you look at this, because now you no longer have that engulfing second candle. As you go deeper in, patterns break and new patterns form, right? So the tighter in you go, the less reliable it is. And of course, right now the support and resistance areas are rough to pinpoint. Like you can see 86 here, right, on the 5-minute chart. And that's actually not terrible. And then you can see on the resistance, it looks like it broke resistance here, came back down. Looks like it hit resistance here, came back down. So realistically, if it bounced off of resistance here and it came back down, you would expect it to come back down to the support here, right? Yo, Dion, what's up, brother? So like everything changes as you look at it on different levels. But if you're looking at it from a longer perspective, you're looking at better historical data. It's not necessarily going to help you trade in the short term. People use different indicators for different time frames because some of them are more reliable on the shorter time frame than some of them are more reliable on the longer time frame than the shorter time frame. These are things that you should be looking into to try to help you along with that.
No, you don't really need to memorize every single candlestick pattern out there, because I'm going to share with you a cheat sheet, right? That within 5 seconds or less, right, you know whether the buyers or sellers are in control. So I'll talk about that later on. But for now, let's talk about the evening star in more detail. So again, the evening star is just the inverse of the morning star. The first candle, you can see that the buyers, they are in control. This is the opening price. They drive the price up higher and close near the highs of the day. Okay, so clearly at this point, right, the buyers, they're in control. And the next selling pressure could come in to push the price down lower. No guarantee you will reverse from resistance, so this is where you can use tools like candlestick patterns, right, to help you time your entry. Again, don't worry, right, we'll talk about all the details, the trading strategies, and
my entry where right and where now, I wouldn't be entering right now.
Over here.
Or are you talking about here?
We have this evening star pattern. Look at the first candle, how bullish it is. The buyers took control and push the price up higher, closing near the highs of the day, breaking out of resistance. People think that, oh man, this is the breakout, it's real time to get long, buy. Then what happened is that on the second day, this candle over here, notice we have this doji looking candle over here. So this is not exactly a doji, because you can see that there's a pretty small body over here. So that's why I call it a doji looking pattern. The body is pretty small, but you can see that there's still a small body. And the message behind this is that, both the buyers and sellers, they're pretty much in equilibrium, because the opening price and the closing price is near the same level. Okay, this is the second candle over here. And then what happened next is on the third candle, the sellers took control, okay, and they drive the price down lower, closing right near the lows of the day. So this lows of the day, right, has took out the lows of the previous day and pretty much drive, more than halfway through of the body of the first candle over here, right? So closing somewhere around this portion right on the first day. So you can see that the sellers, they're now temporarily in control. And also one more thing about the evening star to add is that, according to most textbook definitions, the close of this third candle just has to exceed the halfway point of the first candle to be classified as a evening star pattern. So for example, if let's say this third candle, let's say it only closed somewhere over here, right? This won't be considered an evening star pattern, because it only closed over here, around the 25% mark of the.
Realistically, this is a 5-minute chart, bro. Like, it hasn't hit resistance yet. It can still pump back up and hit resistance and bounce off, or it can hit resistance and break through, right? So like, if you get in here for a short, right, and you go down to you went down to 86, 87, that wouldn't be bad. You'd make money. But if it hits up here, because it decides to continue the pattern up, because it already bounced twice, right? It came back up. It looked like it was resisting a little bit up here, came back down, but it's 5-minute pattern, bro. On this chart, this candle is one candle on the hour chart, right? Like, if you look at it, the 1 hour chart, okay, maybe not one candle, it's like 3 candles, great, but it can still continue its path back up, right, to bounce off of resistance again. Now, this was, this actually might not be bad, because if it bounced here, it came through here, bounced there. Realistically, which one's the resistance? One or this one, right? Historically, there's more data around, well, both points. That's weird. I tell you, I don't know. Because this is technically a resistance area up here, right? But this is also a resistance area because it's bounced over here a few times, right? Like, these are both, I'd say this one's probably the safer one, right? But realistically, you've got an area of resistance up here that's hit multiple times too. So which one do you go off of, Emmy? You know what I'm saying? Yeah, exactly, Makanaki. Whereas, like, if you're looking at the day chart, right, and you're really getting an idea of, like, where it's heading, like, right here, we know that this is actually not a bad resistance point, right? This, it came down from here, bounced around here, right, and then came back up. This isn't a bad resistance point because this looks like it was a prior resistance, right? So realistically, historically, this doesn't look bad for like longer term. Where if it bounces off of this area again down here, right, you could reliably get maybe a 1 or 2 day trade in or something like that, where a few days in where it has decent upward price movement, right? But at the same time, this area right here is so undecided to me, right? I would be nervous trading this area long term. Just because where it's at, it and look, this is even where I was marking the resistance points before. And look at how small they are on this chart compared to everything else, right? Like looking at the smaller time frames it's the 1 hour to the 1 day is a huge difference.
First candle. So it has to exceed the 50% mark of the first candle. So let's say the first candle, the 50% mark, let's say it's somewhere about here. Okay, about here. Okay, so this means that the third candle has to close right beyond the 50% mark. So it has to close below this line. So in this case, it closed over here, which is below this line. So this is where the evening star pattern is kind of like concluded, right? We call this an evening star pattern. So again, this has a bearish annotation to it, and in this case, the market has a slight dip down lower. So let's do a quick recap, right, to the things that you've just learned, right? A lot of candlestick patterns, right? Number one, we talk about the hammer and the shooting star pattern. So these are a single individual reversal candlestick pattern. The hammer looks like this. It tells you that the buyers, they're temporarily in control, and the shooting star looks something like this, and it tells you that the sellers, they are temporarily in control. And another thing to add is that usually for hammer and shooting star, the length of the shadow, right, is usually at least 2 times the length of the body. Okay, so there's another thing to kind of take note of, right? So I repeat once again, the hammer and shooting star, usually the length of the shadow is at least 2 times the length of the body. Yeah. Next one, we have the bullish and bearish engulfing pattern. So bullish engulfing pattern is against a 2-bar reversal pattern. This over here is the first one, is a bearish candle, and then the next candle we have a strong close above the first candle. Okay, so this is what we call bullish engulfing pattern, where the second candle over here has engulfed, right, cover the body of the first candle. So this is a bullish pattern. So the bearish engulfing pattern is just the opposite. It looks something like this, where the first candle we have a bullish candle, okay, and then the next candle, right, could be something like this, where it engulfed the body of the first candle and closed lower for the day. Okay, this is what we call the bearish engulfing pattern. Then moving on, we also talk about the doji, the gravestone doji, and the dragonfly doji. Doji is simple, right? Just across. Gravestone doji is this one over here, and dragonfly doji is like this. Okay, so basically this has a bearish annotation to it, and this has a bullish annotation to it. Why is that? Because over here you can see rejection of higher prices. At one point in time, the market opened at this price point, trade up to this highs, only to get rejected and come down lower and close where it opened for the day. So you can see that this over here, this entire portion is rejection of higher prices, and then this dragonfly doji is just inverse. This entire portion here is rejection of lower prices, where the market closed at the same price where it opened previously. Yeah, and moving on, we talk about the morning star and evening star. This is a 3-candle reversal candlestick pattern. Morning star is something like this, right? So morning star, I mean, if you think about this, how do I know whether morning or evening is bullish or bearish? Just think about the morning, the start of a bright new day. This, things are filled with hope and a great day ahead. So we think about bullishness. Yeah, so morning star is something like this. Okay, so this is usually a down candle. Then we have the next candle where it closes
a lot of you guys showed up. What's up, guys?
So the first candle, the halfway marks, let's say somewhere about here. This means that the third candle has to close above this halfway mark to be classified as a morning star. And evening star is just inverse, right? So this one over here, the first is a green candle, then we have like a doji, or maybe even just a small body candle, and market on the third candle close right below the halfway mark of the first candle. So this is what we call it evening star. So this has a bullish annotation to it, and this has a bearish annotation to it.
All right, so we got
at this point, you've learned a number of candlestick patterns, and here's the truth: is that there are many more other candlestick patterns out there. I think possibly 50 or hundreds more out there. And the reason why, in this case, where did the price particular candle, let's say it assuming it's a daily time frame. Now what about this? The market is closed over here. So where did it close relative to the range? It closed, relatively near towards the highs, but of course not as high as this first candle over here. So overall, we can say that, yeah, this is still somewhat a bullish candle because the price is closed, right? Almost approaching near the highs of the day. Not very close to it, but much nearer to the highs than the lows. Now what about this candle over here? Why is this a least bullish candle? Because yes, even though the market has closed higher for the day, this is the opening price, this is the closing price, even though it has closed higher for the day, but it's actually very far away from this highs of the high of the day. So you can see that this portion over here is what we call a rejection of.
So the further the close of the candle from the tip of the wick in the opposite direction means that, like, so like if it's a green candle and it closes very far from the tip of the wick, that's more bearish. If it's a bearish candle and it closes further away from the tip of the wick, then it's more bullish, right? So just remember that. It's a little weird.
Of higher prices. So yeah, even though it closed higher for the day, there's some sense of a bullishness, but it's not very bullish. I'll consider this the least bullish among the three. So knowing where the candle closed, right, relative to the range, right, can give you an insight to whether the buyers are in control or the sellers are in control. So let's do a few more before we move on. So same for this one over here. The market opened at this price point and then closed. near these lows over here. Why is this a bearish candle? Right, because you can see that yes, even though it closed lower for the day, it didn't manage to close at the extreme lows. It just closed somewhat near to the lows of the day. So we can consider this a bearish candle. Why is this very bearish? It's because the market opened over here and it closed right near the lows of the day, right? Almost near the low. So this is a very bearish candle. And then this is the least bearish is because again, you can see it opened over here. It closes over here. Yes, it's a down day. The market is closed lower for the day. But if you look at the close, right, compared to where it was, right, previously during the day, at one point, right, it was actually trading near these lows over here, and then the buyers did step in and push the price up higher, and eventually causing the market to actually close somewhat below the opening price for the day. So yep, it is still bearish, but it's the least bearish among the other candles that we have just discussed. And again, right, this one over here, why is all this a neutral candle? A neutral candle over here is because again, the market is pretty much just closed, right, within the middle of the range. Okay, you can see right. This is the highs, this is the lows. It closed flat in the middle of the range. So this is a neutral candle telling you that both the buyers and sellers, they are pretty much in equilibrium. Same for this one over here. This one, fun fact, this is what we call a long-legged doji. In other words, the difference between this first doji pattern and this one over here is that the volatility of this candle over here is greater than the volatility of this doji. So this tells you there's more volatility in this particular market, right? That's why you can see that the swings are much wider, but the meaning behind it is still pretty much the same. The buyers and sellers, they are pretty much in equilibrium. And finally, what's this little negative sign over here? This is what we call a four price doji. This is where the opening price, the highs, the lows, and the close of the day is pretty much at the same price point. And this is usually due to markets which are very illiquid, right? There's not much price movement. You get this so far. Don't forget to smash the thumbs up button to bring a smile to my face. Okay. So now the second part of this cheat sheet, right, is this, right? What's the size of the candle compared to the earlier one? So the first part of this is just after the cheat sheet, right? Just a quick recap as to where did the price close relative to the range. Is to find out who's in control. Are the buyers in control or the sellers in control, right? Because as you know, right, if the price closes near the highs of the range, clearly the buyers are in control. And if the price closes near the lows of the range, the sellers are in control. If it closes near the middle of the range, pretty much indecision, undecided. Now, what about this? What's the size of the candle compared to the earlier ones? This question, right, helps you. This question tells you, right, the conviction, right, behind the move. So let me explain what this means. So if you look at this chart over here, you can see that over here we have a pullback, right? Market goes up, pulls back, goes up, makes a pullback. And then over here we have this, what we call a bullish engulfing pattern, where the body of this candle has engulfed the body of this previous candle. But if you look at the size of this bullish engulfing pattern, it doesn't really give you much conviction behind the move, right? Because if you compare the size of this candle to the size of the earlier candles, like this one over here, this one over here, this one over here, maybe this one over here, it's pretty much similar size or maybe even slightly smaller. Yeah. So where we want to pay attention or to find out whether there's any conviction behind the move is to pay attention to the size of the candlestick pattern, right, compared to the earlier one. So if you see an example like this, right, now you see a difference, right? Market makes a move up higher, it makes a pullback, slight move up higher and makes a pullback, and now we have this bullish engulfing pattern once again. But look at the difference between this bullish engulfing pattern and the earlier one. If you look at this bullish engulfing pattern, this one over here, and you compare it to the earlier candles like this, like this, like this, like this, like this, like this, you can see that it's much bigger than the earlier candle. So this tells you there is conviction behind the move and the market is likely to head up higher. So this is what I mean
do you guys see any other bullish engulfing candles within this chart? Just asking, because I can see one, right? I can almost see two. Where at? The main low, what, down here? Yeah, there's one here, right? Then there's one here, right? There's one up here. This is a big engulf, right? And then there's kind of one over here, right?
By comparing the size of the candle relative to the earlier ones. So just a quick recap with the cheat sheet. Number one, the first question to ask yourself is where did the price close relative to the range of the candle? This gives you an idea to who's in control, whether the buyers, sellers, or equilibrium. And then finally, what's the size of the candle, right, relative to the earlier ones? This tells you whether there's any conviction behind the move or not. Okay, so this kind of like sums up, right, the entire training on candlestick patterns. But what we are going to do next is to actually dive into the trading strategy, because as you've learned earlier, right, we don't just trade candlestick patterns in isolation. We don't just see, oh, Rainer, look, there's a hammer, buy. No, we don't do just that, right? Because we still need to look at the market structure, the area of value, support, resistance, when to enter, when to exit, and much more. So all the juicy stuff.
So yeah, he even said it. He even said it, right? Like he said, you don't trade just off of the candles. You don't just look and say, oh yeah, there's a hammer, like great, like you don't look for the morning star and say, oh yeah, I'm just gonna buy. Look at where it's happening. Look at what time frame you're on. Look at the candles prior. Look at the size of that movement. Because the larger the movement in the other direction helps. Like, there's a lot of things that you guys should be looking at. Not just Like it's like everything else that we do here, right? All of the things that we learn are individual pieces of things that are part of a whole, right? So like a trading strategy isn't just candlestick patterns and support and resistance. The content creation isn't just structure of your post, but it's creativity, good hooks, calls to action. Building your account isn't just posting; it's reply guying and making sure that you're interacting with engagement. Yet, like these are all important things. Everything is part of a package. Everything's part of a whole. So make sure that you guys are taking the time to think about the big picture as you're learning the small picture stuff, because that's important too, guys. All right. Make sure that you're paying attention to the big picture. Because it's easy to get lost in the small picture, and candlestick patterns are just a small part of the picture. But on that note, we're going to end this now. We got through basics of the candlestick patterns, and like the basics of what a candlestick is, or what candlesticks are, and hopefully you guys have a little better understanding of that. I've learned this stuff in the past. I haven't ever taught this stuff, and I haven't looked into this stuff in a long time for like hard, like solid basics of trading. So this was good for me to review with you guys as well. But for now, we're gonna head to the ducks. Duck go. Let's go. Let me get. You wish you were in control? What? In control of your brain or your emotions or what? The market? I wish I was in control of the market when I traded too. I can't make it anymore. I can't make the code any more clear for you, buddy. Not like I don't understand it. But anyway, back to the ducks. Let's go with the ducks. Let me get the name list together here. We'll get this ended just in time for the final task to come through. Where's my bot? There we go. Bot commands / stage track export channel CJF stage. Nope, wrong one. Damn it. CJF stage. Bang. All right. Pull this up. That up. Oh wait. You know what? One. No. Don't save. 1 second. Sheets. Blank. File. Open. All right. We're gonna this. Sort. And I'm going to go 31 minutes. We'll do close enough. There we go. All right. 35 people are eligible for the prizes today. All right. I've sorted. All right. Let's go. Let's see. 1 hour, 27 minutes for Stage good. That's what, you guys can't hear me? You guys not hear me? Lucas, how did you make that, dude? Like, is that where did you get that from? Did you like make that with AI, bro? Thank you guys. All right. So we've got our 3 winners coming up for 10 USDT each. That's really cool, dude. I'd love to know how you where you found that or how you made it, dude. That's cool as fuck. Ready, steady, and quack! Let's go! Quack for your ducks, guys. Chris Obi and Nadia in the lead, but you know where that ends up. Yep, right to the back. Let's see who's going to take first place today. First win of the day. Let's go. I can see Lucas quacking. Slime, if you've been here for over 30 minutes, you're definitely in there. I can promise you that. Yep, you're definitely in there. I just double checked. Dropper got the win. It's based on length of time that you've been in the fall. So like I have a bot that records the list of people. Like for instance, this is the list of people that qualified for today. Right? So your name's most likely in there if you've been here for over 30 minutes. If not, then it's likely you're yeah, and you're in there, dude. Just because you can't see your duck doesn't mean yeah. Yep, see? Trust me, my bot works really well. All right, Dropper is our first winner. Congratulations, Dropper. Ready, steady, and quack! Let's go! So, we're going to mention Dropper. All right. Ella Anya, John Michael, up, and they're falling to the back. Your fave girly, Leo and Arshmallow, along with John Michael in the lead. But you know how that goes. 10 seconds left. Somebody's going to be pulling up from the rear. And it looks like he's going to be Joel this time. Shit. Congratulations, Joel. Hold on. Gotta have one of those weird names, bro. Damn it. Damn it, Joel. What the hell is your name? I'm just copy paste. Yes, you are, Winston. There we go. I think that's the right Joel. All right. And one more. Last but not least, our third and final winner of today. Ready, steady, and quack! Let's go! The names are all the people that qualified for the rewards today. If they get lucky to win. You have to be here typically for 50% of the event. I said it for a half an hour because it was only supposed to be one hour today, but we went over a little bit, so I kept my word on that one. Oh shit! Slime is trying to make it, but he's not gonna make it. It looks like Jules is gonna take it. Poor Slime, so close but so far. All right. All right. I know, Slime. You were robbed. You were robbed. All right. Congratulations to our winners. But today was the last day of this week for the regularly timed events. Tomorrow is going to be a little bit different, guys. So tomorrow is going to be the New Year's Eve party. We're going to be getting together at around 11:30 p.m. EST. And we're going to be watching the ball drop together. We're going to listen to some music. We're going to have some fun. We're going to play some games. We're going to relax, right? And then I'm going to do a New Year's Eve giveaway after the ball drops. We're going to be giving away 3 prizes yet again to 3 lucky winners for New Year's. I want to say thank you guys for being an amazing, 11:30 p.m. EST. So the UTC is going to be like 4:30 a.m. For you guys in Nigeria, it's going to be 6:30 a.m. So you're going to run from 6:30 a.m. to 7:30 a.m. All right? So yeah, if you can make it, you can make it. If not, I understand. But I didn't want to just run another Rumble. I didn't want to just have another event. It's New Year's Eve. We're coming into a new year. I want to celebrate it with you guys by watching one of the biggest New Year's celebrations in the world. The ball drop at Times Square. So we're gonna have some fun together with that. All right. So I will see you guys then. I appreciate you guys for an amazing year that we've had together. And another hopefully amazing year to come. If you need something from me privately, Slime, feel free to open a ticket. I do not do DMs. I do not do adding friends because I don't want people to think that it's okay, because then scammers tend to take advantage of that. So typically I keep it to tickets or chat. All right. So if you have something private, definitely send me a ticket. Easiest way to do that. All right, guys. Thank you again for taking the time to jump in and hang out. I appreciate you all. You all have a wonderful day, and I will see you guys tomorrow for the New Year's Eve party, guys. Fun with that. I'll be saying Happy New Year's. It's gonna be New Year's already for you guys, but I'm gonna still be wishing you guys a Happy New Year's anyway. I will see you guys then. For you guys watching on X, on Twitch, wherever you may be, if you are still there, feel free to come be a friend. We're going to party it up tomorrow night. www.discord.gg/CJN friends. Come be a friend. And I will catch you next time. Bye-bye.